Hi, Scott. So we are getting some headlines from the Wall Street Journal that E-Trade, which is owned by Morgan Stanley, is considering kicking Keith Gill, aka Roaring Kitty, off of that trading platform. According to this report, E-Trade is considering telling Keith Gill he cannot use the platform. This is around potential market manipulation around purchases of GameStop. They call out call options that he bought on E-Trade. There has been this screenshot floating around of an E-Trade account showing Keith Gill bought about $116 million worth of options. That is really the crux of this. He's been posting on social media, but those call options are now calling into question whether all of this and his actions did amount to market manipulation. And the firm is considering and debating, according to this report, whether to pull his account down because of those concerns around market manipulation. The Wall Street Journal also in this report is saying that the SEC has been reviewing trading in GameStop around.
Coming up today, Roaring Kitty is back with a monster position in GameStop. Can Wall Street close him down? Along with short sellers. Nvidia charging higher. Bond yields slide, along with oil. An update on international politics. With Zelensky calling Trump a loser. Central banks set to cut rates. And Mexican stocks in the peso get absolutely pummeled. I got a real interesting one for you today, guys. Let's go. Hey, what's up guys? Welcome back to Click Capital Daily Market Review. Hope you had a great weekend. And as always, big thank you to everybody who tunes in every day and hits that like button. And boy, do I have an interesting one for you today. Before I get into all the diabolical drama and stories out there, first let me just touch on the surface level of the stock market technicals and where we're currently sitting and how we've started off the week trading. On the S&P 500, high highs, higher lows. And just looking at market color, we've now got bond yields pulling back along with oil and energy. Defensive sectors green across the board. Also got the dollar and inflation expectations downtrending. Not the best volume breadth today in NYSE, although we did get some in the Nasdaq, thanks to mega cap tech leading the pack today. However, overall, still got new highs versus new lows in bullish territory. A little bit of a pop in the VIX, but still pretty low there at 13. Volatility risk premium sitting in mid-range around 3.8. But why I'm still leaning to the bullish side, we've got bond yields pulling back again today on a weaker economic print. I'll get into that a bit later on. Whilst we've still got high yield bonds above the 50-day VWAP, the dollar pulling back, which is bullish for stocks, and signs of liquidity still holding up firm like we can see in Bitcoin. And we've got the stock market leader, Nvidia, marching higher today by almost 5% and now within a stone's throw of becoming the world's largest company. And in my opinion, for the stock market to really roll over, we'd need Nvidia to roll over. And looking at this price action, that doesn't look like it's about to happen. However, the biggest story today is that of GameStop and Roaring Kitty, aka Keith Gill. And before I get into the latest development, let me just give a bit of context and background and a refresher for those of you who don't know. And for that, I'll go out to a weekly chart and change it to logarithmic and go back to 2019 when he first started posting on Wall Street Bets forum over on Reddit with a detailed and deep analysis as to why GameStop is undervalued, and he pretty much put his whole account in there. And he was just a mid-level manager for an insurance company at the time, investing in stocks as a side hobby. Went onto YouTube, shared his analysis. Stock was very low, split adjusted, trading around $1 a share. He accumulated, built up quite a bit of following. Then in 2020, during COVID lockdowns, it started to take off and rip and kicked off what's known as the meme mania. And since there was a huge amount of shares short by hedge funds and Wall Street, a consensus developed and a pile-on to try and short squeeze Wall Street. A lot of anti-Wall Street rhetoric, and the stock absolutely exploded into early 2021. Absolute short squeeze. Like I said, split adjusted from about $1 a share in July 20, getting up to $120 a share in January 21. In other words, going up 120x in about 7 months before stockbrokers literally turned off the buy button in what is still a controversial move to this day. Stock came cratering down, and Roaring Kitty and a bunch of others got pulled in front of Congress. And even though it was attempted, no formal criminal charges were brought against Keith Gill, and he kind of disappeared into the abyss, never to be heard from or seen again. And so this is his account over on Reddit, and he hadn't posted since 3 years ago, in which he gave his final update, showing that he still had a position of 200,000 shares in GameStop, worth approximately $31 million. Then a few weeks back, out of the blue, he just started posting a series of memes and videos onto his X account with no context provided, no text, no videos of himself, just cryptic messages and memes that really got the crowd excited. And that kicked off here on the weekend before the 13th of May. And there was already big price action going into that. And in less than 2 weeks, the stock price had gone from $11 all the way up to $64. Then in the latest development, like I said, we hadn't heard from him over on Reddit for 3 years. on Sunday night. He posted GameStop, you only live once YOLO update, June the 2nd, in which it blew away a lot of people as he came out and showed a screenshot from his E-Trade account, in which he's always traded in, showing a position of 5 million shares in GameStop and 120,000 call options, with a strike of $20 expiring just in a couple of weeks, 21st of this month. Total value as of Friday close, with his cash position of $210 million. Really got the internet bubbling with excitement, and Reddit and meme traders back and fired up and ready to go. That's why we saw a huge gap up this morning. Friday it closed $23 a share, opened this morning at $40 a share, and based on the open this morning, his total position, stocks and call options, could have been valued somewhere near $500 million. Absolute crazy and ridiculous number for just some suburban guy trading from his home office. And then he just posted a couple hours ago after market close, he didn't sell any. He's still hodling, and now with his cash position, total value almost $300 million. And this has got a lot of people talking and what to make of it. Some are saying, is this even Keith Gill? Has his account been hacked? Is he being manipulated? Is this a fake screenshot? Has he teamed up with a hedge fund? Has he gone offshore? Etc, etc. Conspiracy theories are running wild left, right, and center. However, let's take a look through some of that developments. Then I'm going to give you my opinion on this whole thing. And of course, as always, you're welcome to share your thoughts and opinion on this below the video. So first off, like I said, his position size is absolutely ridiculous for an individual retail trader in the hundreds of millions of dollars. And people thought he was long gone since the law, Congress, everyone, SEC is watching him so closely. He made his millions. Why doesn't he just sail off into the sunset? But apparently, if this is him, and I think it most likely is, seems to be he's making a really calculated bet. And I'll explain to you how I think he's been able to amass this position in the hundreds of millions, maybe without the help of any external financiers. And just to put it into context, Keith Gill is now up in the big leagues with the biggest and best stock traders in Congress, who also have hundreds of millions of dollars in stocks that they regularly trade using their privileged information. And there's a lot of people saying this is illegal what he's doing. He needs to be shut down. He needs to be sent to jail. How dare he share his position on Reddit for his benefit? It's clear market manipulation, and there's nothing wrong with lifelong politicians using their information to make hundreds of millions of dollars. There's even rumors that E-Trade, owned by one of Wall Street's biggest investment banks, Morgan Stanley, is considering kicking him off the platform. In my opinion, it should be really good publicity for them, showing that a suburban retail trader can actually make it and compete with the biggest and best from Congress and Wall Street. And it's even got big social media influencers like Dave Portnoy and Barstool Sports coming out saying now he owns $1.2 million of GameStop and even $700K of AMC, also trading up in sympathy with GameStop. But we've got some like Andrew Leff from Citron Research, famed short seller, heading back and apparently taking a new short in the position, siding with Wall Street, potentially Congress again, call an end for this madness. And you can just imagine what happens if he comes back onto YouTube. We've seen the run up in GameStop after he came back onto X, and now just coming back onto Reddit. The other social media platform he was big on is YouTube. So what's my breakdown and opinion on all of this? Well, I think personally he's a mastermind. I think he held on to those 200,000 shares in GameStop and may have actually sold them all. And during this period here, when we didn't get any news out, my daily viewers will remember me pointing this out and being like, this is interesting. I initially thought about shorting it. However, the technicals were just so strong on this bull flag. I'm glad I didn't. In my opinion, during this period here, Keith Gill sold his entire underlying position in GameStop, maybe got some outside finance, either through himself with a loan or a friend or a family, all of which is legal, piled into out of the money call options, and then during the weekend of the 11th and 12th of May, started posting memes on X, maybe not expecting it to have such the ridiculous rip that it did, but most likely expecting it could get people excited again. The stock ripped up like absolute crazy, in which he may have offloaded those call options on the open on the 14th, and likely what turned his approximate $25-30 million call option position into over $200 million, bailed out on the calls, the stock dropped, and then I think he reloaded back into common equity on the 17th of May and those call options as well. Since we opened at $21.86 on the 17th of May, which is just above the price he paid for those 5 million shares, $21.27. So that looks like he just got back in. Same with the call options. And like I said, current value after close today, about $260 million. And you guys remember me saying a bit over a week ago, I don't think this is all done with GameStop. It could go for another run yet again, not only with Keith Gill back in the mix, but just how loose overall financial conditions are. Bitcoin near all-time highs, same with the stock market. And that spilled over to a few other meme stocks like AMC and a bunch of others trading up today. And so should he be put in jail? Is this market manipulation? Well, technically speaking, no. You're allowed to share your position on social media. He hasn't even actually said anything. You're allowed to post meme. And hedge funds, companies, even politicians come out and speak in favor of positions they own. There's nothing wrong with talking up your own book. Everyone does it. So why isn't Keith Gill allowed to do it? If he was doing this with $20,000, no one would give a crap. It's just because of the numbers he's dealing with. Why a lot of people say he's clearly manipulating the market to his own benefit. Well, I've got a news flash. That's pretty much how Wall Street operates. They manipulate the market every day for their benefit. But all of a sudden, a suburban retail guy does it, and it's an outrage. So it will be very interesting to see if E-Trade does shut him down, the system tries to come after him again, and how this whole thing unfolds. Of course, there is still a small chance it's not Keith Gill. He could have been hacked. But looking at the actual volume in the stock and options market, those positions can be verified. And like I said, it looks like it was initially accumulated here, offloaded here, and supported here. And that lines up with his postings across social media and how this is all unfolded. So if you haven't already, subscribe to this channel and I'll keep you updated every day after market close on how this interesting story on Wall Street unfolds. But just moving back to the overall stock market and why it's ticking higher again today. Just got another analyst upgrade on Nvidia, helping them to close almost 5% higher today. It's pretty much the whole street has got them rated as buy. However, some are drawing comparisons with Nvidia and Cisco from the late 80s. Here's an overlaid chart of Cisco since its AOL IPO in 92, peaking out in early 2000, like the whole Nasdaq did, and Nvidia since 2016. Very similar performance, and I'd say that's fair to say. Nvidia's closer to a top than a bottom, although no one knows when that exactly is going to occur. And even though we've got a really strong tape at the moment, we do have some weak macro and economic data out there, including US inflation-adjusted disposable income growth slows down, and that's the main driver of spending in the economy. Grew only 1% from a year ago in April, being in a clear downtrend. Inflation's starting to bite. Consumers are pulling back on discretionary items. However, is that a bad thing in that it's downtrending? Or is it a good thing, meaning it has room to go higher? Because just looking at a long-term chart of consumer sentiment and the subsequent 12-month S&P 500 returns. Over that time, consumer sentiments averaged about 84, and every time consumer sentiment, that's how consumers are feeling, has been really low. The forward 12-month returns for the stock market have been pretty good, and vice versa. When consumers are feeling really good, like they were in the late 90s, forward 12-month returns were quite poor. So here we are now at 79.4, still below average, and looking back in history, that's actually supportive of stock market returns going forward, because like I said, you could read this data two different ways. A, things are bad, that means something bad's going to happen in the stock market. Or B, things are bad, that means there's room for them to get better. And in addition to consumers, we got a weak print on construction and manufacturing related data today, coming in below economist estimates, causing a bit of a sharp fall in bond yields. And that was Manufacturers Purchasing Managers Index, coming in at 48.7%, below the medium forecast of 49.6%, sector contracting for a second straight month. But of course, the big one will be this Friday, jobs report. US economy expected to show 178,000 new jobs gained in May. In addition to falling bond yields, what I think also could help give a further tailwind to stocks this week and next, fallen oil prices after OPEC Plus met on Sunday, in which it wasn't too bearish with their decision to extend the cuts by the group into 2025, but begin unwinding some additional voluntary reductions later this year. So initially, the group's cuts, totaling around 2.2 million barrels a day that have been due to expire at the end of June, have been extended through September, but then will be slowly reduced each month. With one analyst saying the near-term plan is likely to support oil fundamentals, with global oil inventories likely to decline through the summer months as demand outpaces supply. However, it looks like the market was hoping for something a lot more. Got a huge move in crude today, down over 4%, now sitting just around $74 a barrel. Clean taking out this support zone, and I think we can just go ahead and move that down to $72 a barrel. Last time the market found support and some buys, and we'll see what happens when we get down there. But again, that's good for inflation around the corner, and thus by extension, stock market. However, as I always remind my viewers, there's that bubbling geopolitical tensions and tail risk. As we heard news last week, Joe Biden approving Ukraine to use US weapons directly inside the Russian border, and a serious escalation causing a strong rebuff from the Russians, saying be careful now, we might use nuclear weapons in response to this move, as it's very unlikely Putin and his team are just going to sit there while US weapons are fired into Russian territory. And since Trump has come out and said if re-elected, one of his first orders of business will be to negotiate an end to the Ukraine war, and a similar moves to his first term as US president, in which he'd negotiated and brokered historic peace deals in the Middle East, and again just looking at the track record, was the only US president not to start a new war. That's got some like Ukraine's president Zelensky not too happy with that, actually even calling Donald Trump will be a loser president and bring an end to the US as a global player if he wins the US election and tries to impose a peace deal on Ukraine. So it's clear by the Biden administration's actions, they want the war in Ukraine to keep going, and in partnership with the deep state, willing to do a lot of things to keep Trump from coming back to office. Things that were once only considered to happen in third world countries and banana republics. And to see those same things happening months out from a US presidential election is truly wild and full of hypocrisy, since the US government regularly imposes sanctions on other countries they accuse of weaponizing their legal system against political opponents in the lead up to election. But Joe Biden's right. No one is above the law, and anyone that breaks the law should be prosecuted to the full extent. And we've already seen how far the deep state has gone in the past to get their way and to prevent someone from getting re-elected 1 year inside of an upcoming federal election with policies they strongly disagree about. Hopefully we don't see the same thing again, especially now since we've got Trump vowing to declassify files related to JFK, 9/11 and Epstein, likely to rattle a few cages deep within the state. However, the big issue for a lot of Americans this coming federal election in November is the amount of US taxpayer money being sent to Ukraine to help defend their border, and now even go on the offensive against Russia, just like was confirmed last week, when not even a fraction of that is being spent to defend US's own southern border. At a time the US has seen a record influx of illegals cross over the Mexican border, hitting all-time records, and contributing to the fact that since 2019, the amount of jobs held by native-born Americans is actually lower now than from back then, where jobs for foreign-born Americans pretty much sitting at all-time highs. And in other words, all of America's job growth since 2019 has come from those not born inside the country, and has likely added to high and persistent inflation as well. So there's quite a lot on the ballot this coming November, and it'll be certainly interesting to see how Americans vote and whether we can get a clean election and a decision by the end of the night again, or will it drag out for another few weeks with a lot of late mail-in votes. Moving on, we've got large central banks coming out of Europe and Canada forecast to cut their rates this coming Wednesday and Thursday, likely following the Swiss central bank being the first major central bank to move rates lower after they've been getting a few drops in inflation, but they also have much lower growth than the States and a much more material reason to try and stimulate their economies. Also just had an election in Mexico. The ruling party came through with a landslide victory, and investors in the market did not like that at all, slamming Mexican stocks in the peso much lower to start this week off, as investors don't believe their policies will be good for capital markets. You can see that in the iShares Mexico ETF EWW, falling a whopping 10.7% today on huge volume, along with a big fall in the Mexican peso currency as well. Contrasting that is the election results being awaited for in India, where investors are watching to see whether Prime Minister Narendra Modi will remain in power, with investors feeling much better about that country today. Send in the India ETF, up 3.38%. There's a look at the economic calendar today. The ISM manufacturing PMI coming in weaker than expected. It's got bond yields pulling back along with the dollar. Looking out till tomorrow, we've got JOLTS job openings, factory orders, GDP growth rates from Australia, a few PMIs from the Eurozone and America, along with the Bank of Canada interest rate decision, expected to cut 25 basis points to 475. Going into Thursday, European Central Bank interest rate decision, they're expected to cut 25 basis points as well to 425. And then the big one Friday, in addition to GDP growth in the Eurozone, jobs market in America, unemployment rate expected to come in at 3.9%. And with that economic data today, Fed Fund futures have firmed the odds we're going to get a cut in September. Now currently about 60% we'll see a cut in a couple of months. Fear and Grid Index still in the neutral zone at 51, and corporate insiders not doing a whole lot of trading either. And it's back into the charts and going down to a 5-minute chart on GameStop after hours. Currently as I speak, up another 8%. Trading around $30 a share. And who knows, maybe this is not over. Maybe we take out these highs of $64 a share a few weeks ago, and this thing could go ballistic again. And it'll be interesting to see whether all the Wall Street brokers are going to switch off the buy button again, and how diabolical could this actually get. So make sure you stay tuned in to Click Capital, and I'll keep you updated on everything that's happening here, as it could be again another story of David versus Goliath. But now Roaring Kitty is actually turning into a bit of a Goliath himself. If he is going to get taken to court, he very well has the budget to fight pretty much anyone now. There's the Magnificent Seven as a group, sitting near all-time highs. There's gold not doing much, just still tracking sideways above the 50-day. Agricultural commodities as a group, still holding up. China having a little bounce here today. Energy stocks pulling back sharply on the back of crude. Sharp term down in industrials and regional banks as well. Growth the winning factor today. Cannabis still trying to find support around this zone, where we still may come down and test these lows from back on the 13th of March, where it got down to 730. And as a look at Apple, trading pretty firm here. Like I said last week, starting to look bit constructive. I was initially thinking a few weeks ago, could be a good short in the mid 190s. However, that's not a trade I'll be taking anymore. Just based on the price action, trend strength is back to positive, and who knows, we may top out there. However, it's just not a trade setup I like anymore, as I think the street is starting to come around to the idea of Apple being able to get in on AI with the new iPhone and some announcements coming up for the stock as well. So I'll just be keeping an eye on this one. And like I said, I'm really not sure on AMARC anymore. Just a little suspicious of this price action we've been getting from earnings, and we'll see whether it can defend this gap. And overall, financials a little bit soft here today to start the week. All right, guys, there we are for this very interesting, once again, start to the week on Wall Street. Roaring Kitty and GameStop. It'll be very interesting to see what happens over the coming days, especially since all his call options expire on the 21st of this month. Regular monthly OPEX, third Friday of every month. Who knows, maybe he's going to exercise them at $20 a share. And since he owns 120,000 call contracts, if he did exercise, that would result in another 12 million shares being added to his position of 5 million already in the underlying. Either way, it's certainly entertaining and interesting, along with seeing whether Wall Street, in partnership with Congress, are going to come after him again. Because like I said, technically, he hasn't broken any law. Anybody's allowed to share their position and post memes. Whether that has an effect in the stock market or not, well, it could be a bit of a grey area. But technically, hedge funds, Wall Street, Congress, they all do the same thing. They just don't like to see a regular suburban guy do it as well. So make sure you come back to tomorrow and I'll keep you updated on this situation, along with breaking everything else down for you that's happening across financial markets. And like I always say, I'm just sharing my opinion. You don't have to agree with everything I say. Be sure to let me know your thoughts and opinion below this video, and thanks very much for your support. See you again tomorrow, guys.